Good morning. You are watching a live daily market outlook for Wednesday, 20th of June 2012, prepared by Windsor Brokers. As things in Europe are, let's say, more stable now, the main focus now turns to United States as some before coming to the US and FOMC meeting today to mention that the Europe wants support from world leaders on of G20 meeting that ended yesterday for an ambitious but slow-moving overhaul of the Eurozone, even as pressure built in financial markets for a quicker solution to its debt crisis that threatens the world economy. Europe told a group of 20 summit it intends to work on concrete steps to integrate its banking sector, a major step long pressed by the United States and the other nations to break the cycle of debt-laden countries bailing out their troubled banks, which only pushes governments even deeper into debt. The US President Obama said the sense of urgency amongst European leaders was clear, and they knew what steps were needed to break the fever of an escalating debt crisis. The U.S. Treasury Secretary Timothy Geithner said strengthened the framework for a Euro-wide fiscal and banking union to underpin the common currency would help restore Europe's economic growth and lower painfully high borrowing costs for indebted countries. IMF Chief Christine Lagarde hailed the progress, saying the seeds of a pan-European recovery plan were planted. Now the G20 leaders await the European Union summit next week, where European officials say they will launch the long process of deeper integration, starting with the push for banking union with the aim of finalizing a broad plan by December. Now all hopes are turned towards European Union decisions and the good support of G20 leaders that basically realized how serious the situation in the worldwide economies and especially in Europe is became, and in order to prevent more disastrous scenarios. I think at this point some good base has been built, and we'll see the results very soon. We do hope that at this time it's not going to be only rhetoric, but true action that will save Europe as Eurozone as a bloc with the threat that came from Greece leaving the country, and the current troubles with Spain and Italy will be avoided and will be handled in a proper manner. The top release of today, of course, is the FOMC meeting and their interest rate release, as economic storm clouds gathering abroad and signs of US recovery is flagging. The Fed might feel compelled on today's meeting yesterday, that started basically yesterday, to launch a new round of monetary stimulus. As confronted with rising financial strains in Europe, a year-end fiscal showdown in Washington, and the sharp slowdown in hiring by U.S. employers, many economists expected now Fed to extend the program aimed at pushing down longer-term interest rates to shield the still fragile economy. An extension of so-called Operation Twist, in which the central bank sells bonds with maturities of 3 years or less and buy securities with maturities of 6 years and longer, is seen as a less extreme step than outright purchases of new securities. This week is the Fed's last scheduled policy meeting before Operation Twist expires at the end of this month. Also, another option for the U.S. Central Bank, which wraps up two-day meeting that is ending today, would be to push back its estimate for when it will finally raise overnight interest rates, which have been held near zero since December 2008. After its meeting in April, it said it's expected to keep the exceptionally low rates through at least late 2014, and this will be basically the top release for today. And we're going to take a brief look at today's calendar with some indicators already been released from Australia and Japan, in the early one from Germany, that where May PPI from Germany came in disappointing minus 0.3% compared to forecast of 2.3% and 2.4% release of April. The batch of data coming from UK at 8:30 GMT with the MPC minutes of the latest rate decision, and unemployment rate expected to stay unchanged, as well as claimant count change at 4.9%, with average earnings expected to slightly increase to 0.8% compared to 0.6%. Swiss economic expectations are due at 9 o'clock, no forecast, with -4 in the previous release, and the Americas start late today, 14:30 GMTs. They are the US crude oil inventories that are forecasted for another round of draws in the US crude stocks. Today's forecast for this week, for the past week, is minus draw of 1 million barrels compared to last week's release showing draw of 200,000 barrels. 16:30 GMT is the key release, as mentioned, the FOMC rate decision, where the Fed is expected to stay pat with the rates 0 to 0.25%, with the more interesting being on the statement and the press conference when they will announce more details about possible further support for the banks and the markets, and we'll have some more information after the rate decision and the statement will be released. A quick look at the markets now to see the latest movements in the major currencies and the commodities in the past 24 hours, as euro against dollar keeps the positive tone that was boosted yesterday by mild US data after finding support at above raising a trend line of 122.87 through 124.41. Finding support basically at 125.58 ahead of a fresh rally. So far we have seen 127.29 high. This was in the late hours of yesterday, just ahead of 127.45 last Monday's high, with the positive tone still dominating in the lower time frames, keeping the upside in focus, though some corrective action was seen on overbought hourly conditions, but overall picture remains rather positive and keeps the short-term rally of 122.87 low of 1st of June still in play, as the pair peaked so far at 127.45, retracing close between 38.2 and 50% of the initial down move from 132.82 to 122.87. A strong gain of momentum seen on the larger time frames, in this case on the hourly chart, and the studies pointing higher see good potential for further extension of the short-term recovery from 122.87 with the break above 127.45 to focus 128.00 as round figure resistance, and more significant static barrier at 128.23 21st of May 2012 high that is seen as the next key resistance in the short term. From the downside, overnight's corrective pullback low at 126.61, reinforced by 20 days exponential moving average, offers initial support ahead of 55 days one at 126.44. The previous one, just forgot to mention, is at 126.61, while 125.57 last Monday's low, where is also the bull trend line support, is now acting as a key near-term support, and basically only break below this level would be a signal of fresh weakness, and basically might be signaling also the formation of a double top at this point, and they allow for a deeper reversal as long as 125.57 and 126 basically is the first strong support as round figure support and previous resistance, and 125.57 loss of which will dampen the short-term bulls in favor of deeper reversal with the possibility of leaving a lower top at 127.45 and 127.29. Similar to euro, the sterling remains well supported and continues to head higher as it broke brief break above previous high at 157.40. Has so far cracked 200 days moving average that is at 157.50 with 157.56 seen so far. Positive tone seen on the lower time frames on the 1 and 4-hour charts. Keeps the upside in focus with the near-term support at 156.14, the static one low of yesterday, and the more significant 156 zone previous highs and resistance, and the main bull trend line drawn of 152.67 through 153.22 and 154.04 lows. Reinforced by 4-hour chart 55 days moving average, acts as a key near-term support and the break point, and basically loss of 156.00 would sideline the short-term bulls and allow for deeper reversal. On the upside, clear break above 157.50, 200 days moving average and overnight's high to open way towards 158. And one set 158.47, high of 22nd of May 2012. The dollar yen remains under pressure as multiple failures on the upside keep leaving a succession of lower tops as the near-term trend line drawn of 79.73 through 79.50 and the 79.29 peaks keeps the upside limited for now. The latest attempt higher seen overnight has seen brief break above 79 and the trend line resistance just hitting 79.11 ahead of fresh weakness. Negative signal would be brief break below the near-term range floor at 78.85 that ticked to 78.78. So far, increasing risk of retesting 200 days moving average currently at 78.74 that keeps the near-term price action on the downside protected, but break below this level and the previous low at 78.60 to signal creation of a lower top at 79.78 and open way for a further extension lower with 78 as a round figure support seen next ahead of more significant 77.65 1st of June low and broken main bear trend line of 84.08. For now, only break above 79.13 and the more significant 79.30 is expected to provide near-term relief. However, a regain of 79.80 and 80.00 is to bring bulls back firmly in play and the open way towards next barrier at 80.60. The dollar Swiss is still holding above a strong support zone at 94.20, 94.00 as yesterday's weakness after gains were limited at 95.62 level on Monday, and steady decline reached so far 94.31, nearly fully retracing the 94.22, 95.62 rally with some corrective bounce in overnight on the overextended, oversold hourly studies, so far being limited under 95.00 with the descending 20 days exponential moving average. Negative tone seen on the near-term studies keeps the downside firmly in focus for now, with the likely scenario seen on the retest of 94.31 and 94.20 to open way for further extension towards 94.00 and more significant 93.66 low of 21st of May. On the upside, immediate resistance 94.83, 95, while regain of 95.60 95.55, 95.60 descending trend line and previous high would provide near-term relief. Holding below this level just would risk a lower top and a fresh extension lower as the pair remains in the steady descent of 97.69, first of June high, with nearly 50% of the initial rally from 90.41 to 97.69 seen on the latest dip to 94.20 low seen so far, posted on 18th of June 2012. The crude oil holds the sideways mode in the past couple of days as a narrowing range within the bigger range of 81.10 and 87.00 now seen limited within 85.80 and 82.40 zone, hovering around 84 level for now. Studies on the 4-hour chart are rather in the neutral mode. Also the hourly ones slightly positive, but limited on the upside by 84.72. This was the high of yesterday, with still no strength seen for some more significant gains, as long as the broader range top at 86.61 and 87.00 stays intact. Only break above here, which also marks 23.6% retracement of 106.41 to 81.10 descent would provide a near-term relief and allow for a stronger reversal. Otherwise, a further range and possible attack at 81.10 to open way for a fresh weakness, and possibly target next very strong support at 80.00. And a quick look at gold that is ticking lower after hitting 1633 yesterday, just being short of our important level and the upside target at 1640. A brief break below the ascending trend line of 1532 low of 30th of May still keeps short-term bulls in play, as long as Monday's low at 16 zone, where is also 38.2% retracement level, stays intact. Risk is seen on a break below 1600. That will again weaken the near-term structure and keep the upside out of reach for now. Any reversal above 1600 would keep the short-term bulls in play, with the break above 1640 to open and next barriers. There's not dynamic resistance at 1641, 90 days moving average, 50% retracement of the broader down move from 1790 to 1526 at 1658, and static resistance and peak of 1st of May at 1671. That was all for today. Thanks for being with us. We're back tomorrow morning at the same time at 7:00 GMT. Until then, wish you a nice day and a very successful trading, with our questions and answers session following shortly. Good luck.